Hello everybody, I'm Aaron Norris. It is April 5th, and thanks for joining us for this week's edition of the Norris Group's Real Estate Headline Roundup in 2. First up with a few headlines, spending on construction increased in February as construction has reached fresh highs. FHA-insured loans increased 16% month over month with the increase in both refinancing and home purchases. The National Association of Realtors reports a higher demand for vacation homes with sales increasing over 10% in 2012. CoreLogic says home prices increased 10.2% on an annual basis in February, the most in almost 7 years. Mortgage rates decreased this past week with 30-year rates at 3.5% and 15-year at 2.74. And finally, unemployment numbers released this week were a little disappointing, but take note, construction jobs have shown a marked improvement. Realtytrac says real estate investors seeking higher rental returns might have to look at other markets as hedge funds have come in and overcrowded some areas. Atlanta, Phoenix, and Las Vegas are a few of those cities where margins for rentals have decreased, but prices in those areas have increased. Returns in markets for rentals like Memphis, Tennessee, and Michigan appear to have a little bit more cash flow, but will equity gains be as strong? Only time will tell. Decreased delinquencies, the improving market conditions, and a settlement from Bank of America have Fannie Mae shouting from the rooftops that they're in the black. Fannie Mae reported their annual net income for 2012 as $17.2 billion, the largest ever. This is a huge improvement from 2011 when they experienced a loss of over $16.9 billion with a suffering housing market. Yikes. Barclays reports that the improving market is good news for mortgage servicers and gives them room to go after the worst of the worst loans. Barclays expects servicers to start addressing the estimated 40 to 45% of subprime and 25 to 40% in the Alt-A market that fall into this bucket. Liquidations of these mortgages are expected to double in the next few years. Does that mean more REOs or short sales or more behind-the-scenes note pools? We will have to wait and see. That's it for the headlines this week, but as always, there are many more on the norrisgroup.com/blog. Up on the radio show this week, we've got Mr. Ward Hanigan, of course, the expert in trustee sales and foreclosure forum. April 6th, actually, we're leaving in just a second. We're headed up to Sacramento for How to Make $1 Million Maximizing the Next 24 Months. Don't worry, we're coming back down to Southern California on June 1st, and then we'll actually be back in Northern California later this year, sometime in September. April 11th, we're going to be doing Poised to Pop for the first time in the High Desert at a new club by Tony Alvarez, the High Desert Real Estate Investors Network. And May 7th, we're going to be doing Poised to Pop at Phoebe OC. So check out our calendar on thenorrisgroup.com, as well as all 5 of our hard money lending programs. And if you're interested in earning 9% on something a little bit more passive, you can always check out tngtrustdeeds.com. With that, have a fantastic weekend, and we will see you next week.